there are a lot of people that I've met that just got interested in crypto maybe in the past 1-2 years. So being a new person in the crypto space can be very scary, very good, and when you don't know what you're doing, it can be very dangerous as well. So if you do what you're supposed to do, you can make a lot of money in crypto. The opportunities are endless, but make sure you guys know what you're doing. So I'm here today to share with you guys the basics, the fundamentals that you need to know just to get you guys started, so that you guys know how to invest, what to invest in, not only Bitcoin, because there are so many coins in the market with various different reasons for the coins. Now, I'm going to explain that to you guys right now. Okay. Now, this video, what I'll be explaining is, first of all, the fundamentals. So what is crypto, and like how do you invest, all the fundamental information that you need. All right. And the second thing is going to be the technical part. Now, some of you guys here watching, you guys may already be experienced traders, experienced investors. So this is going to be like a recap for you guys. Okay. It's going to be when you look at the chart. So let's just say a new person is looking at a crypto chart. So I can just pull up the chart to start off with. So at the start, it may look very weird, very confusing on what this is. So let me just share with you guys the basics that you need to kind of understand, kind of grasp what you're looking at and what you can understand and learn from this. Okay. That's the second thing. Now, the third thing is actually going to be, I will also be sharing with you guys my own personal thoughts and things that I found out about the NFT space as well. Just basic stuff, basic things that you guys need to know. But mainly, we're going to focus on the fundamentals and the technicals. All right. Now, let's begin. Okay. So now, first of all, there are a few websites that you guys can use. Now, if you guys are just in crypto or you guys are experienced traders, I'm just going to share with you guys the websites that I use for fundamental and technical analysis. All right. The first and foremost is CoinMarketCap. Now, CoinMarketCap allows you to see all the different coins in the market. So there's hundreds of coins in the market. You can see all of them here, as well as their market cap. Now, market cap is one of the most important things to note when you're investing into a coin, because the market cap shows you how big a coin really is. So let's just say you're investing in a company, for example. Let's just say we're looking at a normal company you want to invest in. So if you're seeing a company, how do you judge if a company is big or a company is small? It's based on like their revenue, right? How much the company is worth, the net worth of the company. The bigger the net worth, the higher its worth. That means the company is really big. For example, Apple is really, really big compared to a much smaller company, for example. All right. Now, the market cap shows you exactly that. It shows you how big is the coin that you're investing in. And there's a reason why you need to know this. Okay. Now, let's look at the market cap first. As you guys already know, this shows you the ranking of the cryptocurrency. So it's ranked from the biggest coin to the smallest coin, all right, in that order. So for example, the first one is Bitcoin. So everyone knows Bitcoin. Everyone knows that Bitcoin is the biggest coin, the most expensive coin in the market. Now, as you can see, they have the price over here, the 24 hours, the movement over the past 24 hours, the movement over the past 7 days, as well as market cap. So market cap is written here. Market cap is actually 794 billion USD. All right. And you have your volume and all that you can leave aside. Now, market cap, you can see 794 billion. But when you look at Ethereum, it's 372 billion. Now, why is market cap important is this. If you guys are investing into anything at all, you always must decide, okay, am I a high risk investor? Am I a medium risk investor? Or am I a safe? Am I a conservative person? I don't want to invest in something too risky. Now, it depends on what kind of investor you are. Some people may be high risk investors. Some people may be low risk investors. It just depends on you. Some people medium risk. Now, this will allow you to show what the coin is, whether it's high risk or low risk or medium risk. Okay. Now, for example, you can look at this. So we go to something a bit easier to look at. Okay. Let's look at, for example, okay, let's look at this. DAI. Okay, no, not DAI. Okay. Okay, you know what? Let's just look at Polygon. All right. Let's just say Polygon right now is 11 billion. That's the market cap. Okay, let's say it's 11 billion. Now, when you want to invest in something, you want to see how fast you can turn your $1 to 2. So you want to make a 100% gain. So that's what you want to look at. Just look at, okay, how fast is it going to take me to make from $1 to $2, maybe from $10 to $20, 100% gain. Now, how you can see is if you invested your $1, for example, into Polygon, all right, and you want to make it two, the $11 billion market cap of Polygon has to become $22 billion. Now, only when the market cap doubles up will the value of your money double up as well. So imagine this. So let's just look at Polygon. It needs to increase by $11 billion. Just imagine this way. The company needs to earn another $11 billion in net worth for you to double up your money. Then we look at, for example, Ethereum. Okay. Now, Ethereum, let's just say we are just round figure 300 billion. Okay. Ethereum has to go to $600 billion in order for you guys to make from $1 to $2. Now, can you see the difference, the parity between these two different coins? Ethereum, you need $300 billion to make your 100% gain. But Polygon only needs $11 billion for you to make it $2. So that is how you can think. So you can see that Ethereum definitely needs way more money. So in that sense, it would take a longer time, or at least it would take more effort for Ethereum to actually make you 100% compared to Polygon. Now, this works both ways, good and bad. So as you can see, Ethereum needs to gain 300 billion to get you from $1 to $2, right? It works the same way. For example, Ethereum now is 300 billion. If you put $1, let's just say you are a person, you're only willing to lose 50% of your money. That's it. Okay. Now, Ethereum needs to go from 300 billion to 150 billion dollars, their market cap, for you to lose your 50 cents. For example, from $1, you're losing 50% of it, so your $1 becomes 50 cents. All right. But if we go to Polygon, for example, so Polygon, let's say 11 billion, right? Now, if Polygon from 11 billion goes down to 5.5 billion, only then from your $1 will go to 50 cents. So then you can see it works the same way, because Polygon requires less amount of drop compared to Ethereum for you to lose the same amount of money. So Polygon only needs 6.5 billion for you to lose, 5.5 billion for you to lose 50 cents. But Ethereum requires 150 billion for you to lose that 50 cents. Now that is the very basic. It's the very basic that you guys can know from market cap, because it allows you to see, okay, I want to invest in this coin. Is this coin high risk? Is this coin low risk? So you can see that from what I said, Polygon is a higher risk compared to Ethereum. Now, Ethereum was considered a safer coin in comparison with Polygon, because it requires more money for it to go up and less money for it. More money for it to go up and more money for it to go down, for it to lose the same amount of money compared to Polygon, where you need to lose just a bit and you can go down or go up. All right. Now, why is this important is, as a new investor or as any investor in the crypto space, you guys need a portfolio. All right. So you need, example, let's just say you have $100. Just for example, you don't want to put all your $100 into one single coin, because why? If that one coin were to drop, you're losing a huge chunk of money. Your risk is not diversified. Okay, that is why people have their own portfolio. So they have their portfolios, maybe from your $100, you have 4 coins, 5 coins, maybe. So you're dividing it such a way that some of the coins are maybe you're a person that you're a high risk taker. Maybe all the coins are high risk. You don't mind that you're a high risk trader. Your portfolio is high risk, but maybe you're a safe trader. So all of your coins are low risk coins. So they're high market cap, low risk coins. So that is how you diversify your risk. Always remember to diversify, because you never really can be 100% certain. So it's better to split the risk compared to putting it all in one single coin. All right. So that's the basics of diversifying your portfolio. All right. So that is market cap in a nutshell. Okay. Now, as you can see, this app in particular shows you everything. So let's just say you have a coin in your head. You want to know, okay, what is the market cap of this coin? I want to go and do my own research. This is the website for you. You can go down, you can search for any coin. So let's just say, for example, I search ICX. All right. So when you click on a coin, it shows you the price of the coin. It shows you the market cap of the coin and everything that you need to know. All right, the information, everything in this app is here right now. It even shows you the exchanges. So for example, it's on Huobi. You can see Huobi Global is there, and it shows you the price, everything that you need to know is in this app. Okay, now that is the first website that I'm going to show you guys. The second website is this. So right now, one of the methods that you can use to be able to kind of choose what coins you want to buy is based on the information that you can get on what does the coin, what is the coin planning to release in the future. So what is the coin building on? Okay, now for example, the website is called Coin Market Cal. Now this website shows you a calendar of different events for different coins. Okay, so it could be any coin that you're looking for. So let's just say, like I showed just now, ICX right here. So you can see ICX is having an AMA. So they show you, okay, I mean, this is a normal information, it's nothing so great. Okay, but what you guys can look out for is testnets and mainnets. So there is a saying in crypto, you always want to buy the testnet and sell on the mainnet. Okay, that is a way of trading as well. Now, it doesn't work all of the time because, like I said, nothing is guaranteed in crypto, but there's a lot of times that it worked. Now, let me show you guys. So you have different particular, just move this. Okay, so you have different sections. You have trending, significant, hot, and coins in potential. So let's go to trending. Now, why I like to see trending is because it shows you what people are looking at. Now, of course, if people are looking at one particular coin a lot, then you know, well, that coin might just do well because we are the people are the one that is making the coin's price go up. More interest, price goes up. Okay, so let's just see at trending now. Okay, you can see a lot of coins. There'll be all sorts of coins here. Okay, now as you can see right now over here, Polygon Matic, you can see it's significant, trending, and hot. So a lot of people are looking into, a lot of people are looking into this event right now, which is a big announcement coming for Polygon. Now, in this particular one, you do not know what the announcement is going to be, but you can know that it's happening on the 22nd of April, which is tomorrow. Yeah, so it's going to happen tomorrow, and you can see that this event could make the coin price go up. Why? Because when an event comes up, people hear about the event. If it's good news, people flock in, demand goes up, the price will shoot up. And I've seen it multiple times for many, many coins. So for example, there's a testnet, or there's a token burn, or there's like an airdrop. Now, all these things I found out through this website, because airdrops are, they tell about airdrops way back in this website. If you go through the calendar, maybe 1-2 months in advance. So if you guys don't know, for you guys who do not know what airdrops are they give you free cryptocurrency for holding another cryptocurrency. So even that information is given in this website. Any sort of airdrop that is coming is listed here. I forgot what are the airdrops that I did get, but the information that I got here. Okay, so now Polygon Matic, you can see 22nd. What you can normally do is so for example, let's see Polygon. All right, you can see all the upcoming events. So there's only one upcoming event. Okay, so nothing too insane. Okay, let's just see Cardano. Okay, Cardano also won. So you see, this is the Vasil hard fork, which is happening also on the 30th of June. Let me see anything else. Okay, EOS, for example. Okay, EOS also only one. There are some coins. Okay, let's just say this coin. For example, I'm just clicking on this coin. They will show you all the upcoming events for a particular coin. You can search any coin up, they will show you. So for example, another good thing is listing. Okay, as you can see, this coin, which I just clicked, has a listing on Maxi, has a listing on KuCoin coming up today. Yeah, it might have happened, it might have not. I'm not sure the timing yet because it's UTC. So what happens is a listing is also an event that drives the price of the coin up because people get excited that it's exposed to another exchange, more people come in. So if you guys are able to actually get coins that from another exchange, or what, you just hold it in Huobi, for example, and it's actually getting launched on other exchanges, immediately this price of the coin will shoot up temporarily due to demand, a short of demand. All right, so these are all different events that you guys can look out for, mainnets and stuff like that, information about a coin if you want. So for example, you're already invested in a coin, you want to know what is the coin doing, is the coin even going to go up? This is where you search. You can search all what the coin is planning and even proof. So for example, okay, let's just say I click on proof, right? You want to see, they show you that Polygon actually tweeted about it, and this is the proof that it's coming. So, well, you can see this is the proof for whatever the announcement is going to be. All right. Now, so we have covered the basics of market cap. We have covered the place where I used to see what are the upcoming events. Okay. Now, let's look at a bit of technical analysis. All right. Okay. Let's see. Okay, you know what? Maybe before technical analysis, I'll show you guys one more website, which is the Coin Telegraph. Now, what is important for fundamentals is not only knowing about the coin, not only knowing what coin, but also knowing the overall condition of the crypto market right now. Okay, as you guys know right now, if you guys have been in crypto, the markets are right now a bit confusing because we always had a market cycle. Okay, I'll go through that in a while. We always had a blow off top, and then it descends, bear market, and then it continues again every 4 years due to the halving of Bitcoin. Okay, now all this is normal information that we know, but it's not happening right now. We're still in between of a bull run, in between of a bear market. Now, besides that, this is the place that shows you what is going on in the market. Who is actually buying Bitcoin? What are the rules getting implemented on Bitcoin and stuff? So you can see Cointelegraph is one of the places I use. So you can see every single news that you want to know. You want to see what's going on in the market. Keep yourself updated with the market. This is the place you guys can go. Any sort of information you can see, all right? You can see analysts say Bitcoin has already capitulated target 41.3 thousand as the most whole level. So stuff like this from big analysts, they also can give you their own predictions on what they think Bitcoin is doing, where they think Bitcoin is going. Everything is going to be in this website right here. Okay. All right. So yeah, this website you can go through it yourself, guys. There's a lot of information here: articles, magazine, markets, indexes, you name it. Is Bitcoin, NFTs, altcoins, all sorts, specifically for crypto. Okay. Now we shall go into technical analysis. All right. Okay. Now, there are a lot of different types of graphs, different types of charts that you guys can use to look at cryptocurrencies price movements. Okay, there are lots. There are line graphs, and there's this candlestick graphs. Candlestick graphs are by far, I feel, the best graph that you guys can use to understand technical analysis. Because if you look at a line graph, it only tells you the price movement, but a candlestick graph can even show you technical analysis itself just by the candlestick itself without having indicators. So indicators are like, as you can see on my screen right now, there are lines, there are green lines, red lines, and some of you guys may know what it is, some of you guys may not. Okay, so I'm going to share it with you guys right now. Okay, now you can see each candlestick, there's a color, there's a red and there's a green. Okay, now the red and green shows you green. Okay, let's start with green. Okay, green shows you that when the price of a particular coin opens, did it close higher than the opening price or lower than the opening price? Now, let's just say, for example, coin A, for that day, let's just say tomorrow morning is opening, okay? Now, the candle opens. If the price of the coin maybe goes from $1 to $2, $3, all right? Now, that's an increase in your price. And because of that, the candle will be green, showing that there was an increase in price when the candle closes, okay? Now, if the price was at $1 and it dropped to 50 cents, that's a decrease in price and the candle will be red. Okay, now let's look in more detail on how a candle looks like. So let's just take simple candle. Let me see. Okay, you know what? Let's just take this one candle right here. This candle right here, okay? So you're going to look at this red candle. Now, what does this mean? First and foremost, when you look at a graph, okay, there are different time frames, okay? Remember, this is different time frames. You can see over here, there is 1 day, 4 hours, 2 hours, goes on 45 minutes, 15 minutes. I don't really use the seconds. 5 minutes, 15 minutes, you can use 4 hours, you can use 1 hour, 1 day, 1 week. Now, what is the reasons for different time frames? Is so that, let's just say you guys are trading or you guys are investing in a coin, okay? You are using technical analysis to invest in a coin. You want to see, are you aiming to make profit maybe in a day? Or are you using your technical analysis for a week, a month, a year? This is what you use to determine that. Now, the shorter the time frame, the shorter your duration that you're using to take your trade and to exit your trade. So for example, you're investing in a coin, you use technical analysis, you're investing in a coin, you want to get out maybe in a day or two. This is what you can use. So you can use maybe the 1 hour chart, the 4 hours chart. If you're a trader, which is you're using derivatives, for example, using futures, all right? Futures, I will explain a bit later, but let's just say it's a derivative, okay? So you guys are trading using leverage. Now that you can maybe use 15 minutes, you can use 30 minutes, you can use 1 hour, 4 hours as well. So the shorter the time frame, the shorter your duration your trade. 1 day, 1 week is for longer term traders. You want to see what's going to happen in a month, what's going to happen in few months, maybe a year. Month, day, and week is what you use for that. Okay. Now, the day, what does this mean? 1 hour, 2 hours, 3 hours. It means that if let's just say I'm choosing the 1 day candle, it means that each candle that you are seeing right now represents 1 day. That means, example, it opens at 8 a.m. today, closes at 8 a.m. tomorrow. 1 whole day. So the candle opens and the candle closes. Okay. So let's just say I'm looking at the 1 day right now. Okay. So this candle, as you can see right here, the date is over here, is on the 8th of September 2021. So as you can see, if I move to the next candle at the bottom over here, you can see it's the 7th September, 6th September, 8th September. You can see the days goes by. Now, if you choose the 1 hour, for example, it will show you every hour the candle closes. So for example, 10 o'clock it opens, 11 o'clock the candle closes. Okay. If you guys don't understand anything, I will explain in detail later. Okay. Now, this is a candlestick. This right here is a candlestick. Okay. What does it mean is you can see that there's a body and the 2 lines on the top and the bottom are called wicks. Okay. Why this is important is you can see, first of all, you notice the color is red. What does that show you? It shows you price decreased, right? So you can see that if the price decreased, the body is what shows you where it opened and where it closed. Okay. Now, if the price is red, you know the price reduced. So that means the opening price should be on top and the closing price should be at the bottom. All right. Now, the opening price is on top means the opening price was here. For example, 0.1539. And when it dropped all the way, it dropped to 0.1494. So the body represents the opening price and the closing price. And in this case, because the candle is red, the opening price goes on top and the closing price goes at the bottom. Okay. Now, if you look at the green candle beside it, for example, because it's a green candle, we can say that the opening price is at the bottom and the closing price is on top because the price from the opening to the closing increased. That's why it's green. Okay. So you can see that this body is bigger. So you can see the body started over here, 0.1452. And went all the way up here to 0.1536. So as you can see, increase in price, that's the body and a green candle. Now, what are the wicks? The wicks are the same for the red candle or for the green candle. The wicks represent the same thing. Okay. Now, we take this candle, for example. The wick shows you in that 1 day. That means the candle opened at 8 a.m., for example, and closes next day 8 a.m., right? Now, in between the day, there are a lot of movements in the market. Okay. Now, just because the price opened here does not mean it straight went down and closed there. That's it. No, there was going up, there was going down, there was volatility in the market. So the top wick shows you in that one candle before it closed, how high did the price actually reach? Okay. Now, in this case, the price opened at 0.1537, but in that day, it actually went all the way to 0.1592. So it went up. It went up actually, but it did not close there. It came back down and it went down all the way to 0.144. Okay. Now, the bottom wick is the same where it shows you in that day what is the lowest price that the candle reached. It did not close there, but what is that price? So, for example, okay, it went up, it opened here, it went up, it went all the way down, but before the candle closed, that means tomorrow morning, 8 a.m., maybe 7:50, before the candle closes, the price actually went up a bit to 0.149 and closed there. Now, that is the very fundamental that you guys can know from a candlestick, because a lot of people may look at candlesticks and say, okay, price go up, price go down, price go up, price go down. But this explains to you, shows you exactly what does this wicks mean, what does this candlesticks mean. Okay, now that, so you guys understand that part. Now we can look at a bit of technical analysis. Okay, because I'm trying to squeeze as much information as I can for you guys, because the live will end at 7:45. So I have another 20 minutes to go. I'm going to share with you guys some more fun, a bit more technical analysis on what I use, the basics that I use for technical analysis, as well as a bit of NFTs. Okay, so stay tuned, because the last part is going to be NFTs. All right, now let's get into it. So the two main indicators that I use is the EMA ribbon and the RSI, relative strength index. Yeah, sorry, I forgot that, but yeah. So I use the RSI 14 and I use the EMA ribbon, as you can see over here. Just to let you guys know, if you guys don't know what this website is, by the way, it's called Trading View, and it's the website that allows you to look at any coin, anything, stocks or whatever if you want, but specifically I use it for crypto. All the cryptos that you want, you can use and see in this app. They have technical indicators that you guys can use, and it's free of charge unless you want to pay for the premium version. That is up to you. All right. Now, so you can choose a coin by choosing over here. So, for example, I just randomly chose VT to show you guys what I mean. So you can type anything. For example, okay, let's just say ICX, like what I said earlier. You can see ICX USD. As you can see, there are many exchanges that also gives you the charts. You can see Huobi is here, USDT. You can see all the other exchanges are there as well. Okay, so you can click on it and it shows you the chart immediately. For now, we're going to stick to VT. Okay, we're going to take an example on how an EMA ribbon works. So now, in the basics of technical analysis, you must always remember support and resistance. Now, if you guys have not heard about this, I'm going to explain to you guys. If you have, well, EMA ribbon stands and supports this support and resistance. Like, how you can look at it is this. Now, support is like a floor and resistance is like a ceiling. Okay, price will bounce off a floor, and when it reaches a ceiling, it will hit the ceiling and come down. So there's always support and resistance in a chart. The only trick and the skill is to identify it. Now, the EMA ribbon is one of the tools that helps you identify support and resistance in a way. Okay, some people use their own lines to show where the support and where the resistance are. That you can practice to identify it, but the basic tool you can use is the EMA ribbon. The EMA ribbon shows you where the support is. Okay, now you can look at the EMA ribbon as if it's like a rubber band. Okay, the price goes to the rubber band and it bounces up. So, for example, look at EVT. Now, we can look from all the way back here when the whole bull run started. Okay, now as you can see, the price, it went up here, came back to the EMA ribbon, it did not go below it, it touched the EMA ribbon and went up. Now it went down again and it went up higher. Why you can use this and how can you use this to invest in cryptocurrencies is, whenever you want to buy a coin, you want to buy it when it's touching support. Why is because that could be the lowest price that you could buy in. Now, why is because, as you can see over here, look at VT, right? Let's just say someone that does not know technical analysis, they just straight away, they see the coin, okay, I like the coin, let's buy it. Okay, now, let's just say they buy it somewhere around here, 0.29. Okay, they buy it there, not knowing that at that point, it is not touching the support. The support is all the way down here. Is all the way in the EMA ribbon. Okay, so somebody that knows technical analysis, they know what support resistance is. When they look at the price of VT, they will know, okay, you know what? At this point right here, it has gone higher than the line, the support line. Why don't I wait for the price to touch the support again? Then I'll buy in. Then what happens is the price goes back down all the way and touches support. Now, you may ask me, there's not one single line for support. Well, that's right. Because you can't exactly, this indicator can't exactly show you, okay, you know what? This is the point it's going to touch. You have to buy at this point. No. Always remember, technical indicators allow you to get an edge, an extra advantage in the market. Okay, it gives you a higher probability of success, because let's just say a random person were to come and just randomly, buy something or trade Okay, without technical analysis, blindly trading is a gamble. Why? Because your luck is 50-50. It could go up, it could go down. Two ways, 50-50. Now, technical analysis allows you to get a better probability. So when you know technical analysis, it is not guaranteed, it's not 100%, but it allows you to maybe get a 70% probability and 80% probability of choosing the right direction. Okay. Now, let's just say you are a person, so you don't need to buy at this range right here. You bought it anywhere there, you will still buy it lower price than the person who does not know technical analysis. Okay. Someone that buys here at 0.03, and let's just say you're able to buy it at 0.02. Now, that is a very, very good price compared to the person, because that person who bought at 0.03 is already in a loss, a paper loss, but loss when you are being able to buy at that point for much more coins with the same amount of money. Okay. Now, it works the same way. So, for example, it goes up and it comes back down. So, whenever it touches that, do you realize that it bounces off? Now, that is how you know it's a support. One more way that you can confirm support, but in this case, if the bounce is 3 times on the EMA ribbon, then you can be more certain that the EMA ribbon is stronger. If it bounces off 3 times, it is stronger. So, for example, you can see one over here. This one was not really a bounce. One over here, two over here, and three over here. That itself shows you that, okay, you know what, the EMA ribbon is actually strong. It's actually very, very valid, because 3 times shows you confidence that, you know what, this is good. Okay. Now, if you're able to buy at these points of support, it's the lowest price. Now, as it goes up, you can see it still respects the support. Okay. All the way here, you see it comes down, it touches, it comes down, it touches, it comes down, it touches, and it continues going higher and higher and higher. Now, this is the part that I can say, you can ask me, okay, you said that it bounces off, then why is it now below it? Now, this is where another technical analysis comes in called breakout. Okay. Now, I'm going to be really quick with this. Okay. Breakout means that the support is there. So you have your EMA ribbon, right? You have your support over there. Let's just say the price goes below the support. Now, when it goes below the support, that is when you know that is a breakout. Now, that is a way to actually take a trade as well, but that would be taking a short trade. Why? Now, imagine this, picture this, okay? It works both ways. It works for support and resistance, okay? If a price is going and is bouncing off the floor, okay? Let's just say the price actually now breaks the floor. That means it breaks the support. It closes below the support. What will happen is then we can assume that because it broke the support, it is going to fly down, or is going to continue going down because it has broken support. Now, it works the same way for resistance. Now, if it's on a downtrend, if it's going down, okay, going down, and there's a resistance over there, if it breaks the resistance, it will fly up. Now, I haven't really presented the going down part because this is more towards investing, not into trading yet. So that is how you can see it. Now, if you're investing and you see that the coin has now broken support, that is an indicator for you that, you know what, maybe now the price is going to continue going further. It might be a good time to take out my money. Now, you can see it clearly over here. VT went all the way up here, okay, came down, went up. This time, you can see at this point right here, it has already closed. The candle closed below the support. Now, when a candle closes below a support, that is confirmation of a breakout, okay? Now, the candle closed below support, then what happened? Then the price dropped at this point right here. For example, the price dropped all the way down, 70% the price dropped. So that is a sign that that was a good time to take out your money. That was a really good time to take out your money. So this is a very simple indicator that you can use to kind of know when should I get out of a coin, when I should get into a coin, breakout, and EMA ribbon, okay? Now, I have another 10 minutes to go. I shall share with you guys the RSIs. Okay, hold on. Okay, now, due to the lack of time, I don't think I have the time to share about the RSI yet, because that's another theory. The RSI is over this. Is this how do you read this? But I will come live again really soon. So I will share about that. Okay. Now, on the other hand, I want to talk to you guys a bit about NFTs as well, because, you know, I want it so that you guys have a bit of both all three worlds. You have fundamentals, you have technicals, as well as NFTs. Okay. Now, I know a lot of you guys have been seeing a lot of people making money in the NFT space, but there's a few things that you guys must note. Okay. Now, of course, the main place that you guys can go is OpenSea, for example. This is what I'm looking at. Okay. Yeah. OpenSea, you can see all sorts of different NFTs over here. You can see hold on, let me see. Okay, you can explore collections, you can see what are the top NFTs and all everything. So this also is a good way to make money, but let me tell you guys this: NFTs are riskier than cryptocurrencies. Okay, NFTs are way more riskier than cryptocurrencies. Why? Is because, well, cryptocurrencies is liquid meaning, in Huobi, for example, you go to the app. So let's just say you go to, okay, yeah, let's look at Huobi right now. Okay, so you look at spot trading. Now, why do I say it's liquid? You can see over here is order book. The order book shows you all the people that are putting in orders to buy and to sell the coin. Now, if you go on Huobi right now and you put an order to sell or to buy Bitcoin, you would get filled almost immediately, because Huobi has a huge liquid of people buying and selling the coin every single day. Okay. In NFTs, on the other hand, it is not so liquid. Meaning, you have an NFT, but let's just say no one wants to buy an NFT. Well, then you can't sell your NFT. Okay, so give me a second. Okay, sorry. Now, if you can't sell your NFT, you can't get your money back, and then you lose money. So it's very important to be very, very careful when investing in NFTs, because you never know for sure if this NFT is going to make it or not. So it's always better and safer for you guys to use money that you're willing to risk to invest into NFTs. Okay. Okay. Now let's look at the top rankings. Now, the first thing I want to share with you guys in the NFT space is how to pick out good projects, how to pick out blue chip projects. Now, it's easier said than done. There's a lot of things that you guys must look at. Okay, but the basics that you guys can see is this. Now, think about this. Okay, you look at Bored Ape Yacht Club, you look at CryptoPunks, you look at Sandbox, you look at Azuki. If you guys don't know about Azuki, Azuki is also a very big crypto NFTs that is coming up and is on the way to becoming a blue chip. Okay, now let me just see if I can search it up. If something is okay, Azuki. Okay, I think my let me just see if it loads up. Okay, now let me just share this with you guys first. Okay, now if an NFT is coming up, you want to be able to see if the NFT is something new to the NFT space. For example, CryptoPunks was the very first NFTs to come up, one of the very few to come up. So the whole idea of the NFT begin with them, which is the start. All right, that is why they are so good, they are so famous. All right, then people try to copy it, but nothing worked. Okay, then came up Bored Ape. Now, Bored Ape was the one that revolutionized the whole NFT space. They were the ones to create the idea of having one singular animal, for example, or object, and use different variations of that object and make it into a unique NFT. Now, with that same idea came different NFTs that people use different animals and redesign them and all that. That is all people who followed Bored Ape. But Bored Ape was a pioneer. That is why it did so well. They were the ones to really change the way NFTs are. Then came Azuki. Now, Azuki, on the other hand, it is not loading. I have no idea why. Maybe it's because there's too many tabs, but I'll just quickly go through it. If you guys can search after this, Azuki was one of the first NFTs to use anime as a theme. Now, no NFTs really did anime before this, but they did it. They were the first to really use anime as a theme, and they started at 2 Ethereum. Now it's at like 28, 25 Ethereum. So always invest in projects that are the first. Try to find something unique, something people have not seen yet, because that is something that will blow up. If you're trying to invest and you see a copy, someone who's trying to follow, might not work so well. Okay, because I've seen it happen in so many crypto NFTs lately, where their artwork is good, but they're trying to copy the concept of someone else, of another blue chip, and it doesn't really do extremely well. It does not reach a blue chip level because there is already a pioneer. As well as Sandbox, for example, one of the few companies to start off NFT land. That was one reason why they're so good. Okay. Now, that is the short time that I can use for NFTs right now for guys, so that whenever you guys want to invest in NFTs, try to look out for something new, because you never know which might make it. Try to find something that you don't normally see, a design or an item that you don't normally see in the NFT space, something unique, and that might just be the next blue chip. Okay, that is one of the small things that you can kind of see. All right, now lastly, I can share with you guys before I have to end the live is this: the market psychology. Now, you guys may have seen this, may have not, but what's happening right now with the whole economical problems around the world? As you guys know, there's two countries that are at war right now, and there's so many things going on in the market. That is why Bitcoin and the whole crypto space is not actually going the way that we think it is. Because all this time, if you guys have seen the charts from 2013 to 2017 to 2021, a 4-year cycle, meaning every 4 years there's a bull run, there's a peak, there's a crash, and there's a bear market. That is how we all thought it's actually going to be. It happened twice in a row, and well, perfectly. But except this time. Now, this time the bull run, we did not have a blow off top. So you can see in the cycle, it starts off here at disbelief, and you can see as it goes higher and higher and higher, this whole area here is the bull run. So it goes up to make a blow off top. Now, blow off top is where the price shoots up. It makes a sharp edge, a sharp peak, and then it comes down slowly because the price has already reached a high level and it needs to cool off. And that's when the price goes here. Now, this area right here is called a bull trap. A bull trap meaning when the price goes down and goes up, people will be thinking, oh, okay, you know what? I don't think it's the end. I think we're going to go higher. That is exactly what a bull trap is, where the bulls trap you and then you go to the bear market. Okay, so the price then makes a lower high and crashes all the way to a bear market. Now, the bear market has been going on for 4 years, as you can see before this. But this time, it's a bit different because if you ask my honest opinion, I feel that when in a market, when everyone knows something, it might not happen. When everyone does not know something, it might happen. That's how it is all this while. So there are so many people who got into the crypto space in this short period of time where this whole cycle, many people started coming into crypto. And because that, I don't really think that this might just happen. Well, it could honestly go into a bear market. But remember, bear markets are actually great times to actually accumulate crypto. So head on to Huobi and choose, like I told you, your own portfolio. Try to see what coin suits you, because Huobi gives you an ample option of coins to choose from. Any coin you can think of, almost it's all on Huobi right now, and you guys can do that. Now, before I end the live, I want to actually thank you guys for your time. But if you guys like the way I am, giving you guys the information and sharing with you guys, I am on YouTube. For example, you can see I have my channel, Everything Dollar Making, over here. I also have my TikTok, which is also Everything Dollar Making, and everything is shared over there. So if you guys like, you can come and just chill there. So yeah, I hope you guys actually got some kind of information from this. If there's anything you guys want to know or what, you guys can actually put in the comments, because I will watch and rewatch it and read them, so that the next time I am on Huobi, I'm doing the live again, I'll be able to share with you guys whatever that is you want to know. All right, there's still a lot I can actually share with you guys, but well, you gotta wait for the next live session. There's the RSI, there is a few more technical indicators, there's also different ways to read the candlestick patterns, because each candlestick itself can give you information about technical analysis. All right, there's a few more fundamental things I can share with you guys about, but that's all the time I have for now. All right, it's been great being able to share this with you guys and the opportunity on Huobi itself. I hope to be able to see you guys soon, and well, see you real soon.